Stocks rise as markets brace for Trump win, Fed rate cut. Global stocks climbed on expectations of a Trump presidency, with investors banking on policy shifts favoring lower taxes and deregulation. Asian markets, especially in China, surged over 2% on optimism for new stimulus and strong export growth data. Meanwhile, U.S. markets saw the S&P 500 rise to 0.5% and Nasdaq 100 jump to 0.7% in the best post-election day rally in history, as traders factored in a potential rate cut by the Federal Reserve on Thursday. Treasury yields also climbed, reflecting anticipated inflation from Trump's proposed tariffs and fiscal expansion. China's CSI 300 index rebounded as consumer stocks rallied, driven by expectations that Beijing will soon announce policies to support domestic demand. The Fed's expected quarter-point rate cut caps a dynamic session as markets look to adapt to the evolving political and economic landscape. Markets surge as Trump wins Spurs Trump trade rally. Markets reacted sharply to Donald Trump's U.S. election victory, with investors rallying behind the Trump trade. The benchmark 10-year Treasury yield spiked 21 basis points to 4.48%, as expectations of inflationary policies led to higher bond yields. The dollar strengthened across all major currencies, with the Bloomberg Dollar Spot Index climbing to its highest since 2023. U.S. stocks surged, with the S&P 500, Dow, and Nasdaq hitting fresh highs, and small-cap stocks in the Russell 2000 up by 5.8%, seen as beneficiaries of Trump's protectionist stance. Tesla shares spiked 15%, bolstered by Trump's pro-manufacturing agenda, while Bitcoin hit a new high above $76,000 as crypto markets reacted to Trump's support of digital assets. Meanwhile, Wall Street's fear gauge, the VIX, dropped 20%, indicating reduced market anxiety. Metals drop as Trump wins Spurs commodity volatility. After Trump's election win, metals saw significant declines, with copper down almost 4% and gold dropping to a 3-week low. Oil and agricultural commodities, however, managed to recover some early losses, with corn, wheat, and soybeans showing gains due to stronger soy oil futures. The market response reflects concerns over Trump's proposed tariffs and support for domestic manufacturing, which could heighten inflation and disrupt global trade, especially with China. Analysts suggest Trump's stance on energy may bolster U.S. oil and gas but could also dampen growth in renewables, especially as he plans to reverse parts of the Inflation Reduction Act. The dollar's strength also pressured U.S. grain exports, adding to volatility. Amid expected policy changes and inflation risks, metals like gold remain appealing as safe haven assets, though uncertainty around tariffs and trade policies may keep commodities volatile.